Namaskar, welcome to Kalam IS. This is Vasudev Singh Bhati. Welcome to this second session of, just a second, hold on, there is an echo here in voice. Am I audible to you now? Okay. So this is the second session of economy. How was your test today? Please write in the comment section. How did you find it? How did you find it closer to your UPSC PYQs? If you have seen the UPSC PYQs, you will find that questions are more conceptual in nature. So we also try to do the same here also. And there are some factual questions. So what we will do today is we will deal with all the concepts, factual questions. We will look at them, but we will not discuss those in details because the purpose of this class is to ensure to help you solve the questions, even unknown questions, how to solve those questions also. So starting today, first question is about, okay, how many of the above constitutes revenue receipts? So the first question is, how many of the above constitutes revenue receipts? There is direct taxes, indirect taxes, dividends and profits on investment made by the government, receipts from disinvestment, and fees and other receipts for the services rendered by the government. Now, if you know the definition of revenue receipts are basically income of the government of India. There are two types of receipts for government of India. One is revenue receipts, other is capital receipts. So revenue receipt is the income. Capital receipt is something you get either by selling something or by borrowing something from the market. So are we selling or borrowing in any of the following points? Indirect taxes, that is a income, okay. Indirect taxes is also an income, okay. Dividends and profits, profit is an income, okay. Fees and other receipts for the services rendered by the government, this is also a income for the government. But receipts from disinvestment, what happens in disinvestment is government sells its shares in certain PSUs. So if the government sells its shares, then it is not an income for the government, it is a revenue receipts. It is not a capital, it is a capital receipts. It is not a revenue receipts. So except the fourth, 1, 2, 3 and 5. So we will look at the options, 1 only, 2 only, 3 only, 4 only and 5 only. You know there is 1, 2, 3, 4. So answer should be C. So C is the answer to this question. Next question is, with reference to GST, consider the following. It has created single national market, common tax base and common tax laws for the center and the state. This statement is correct. It would help in cascading and double taxation. Now cascading, what do you understand by cascading? Cascading is basically when there is tax on the taxes. For example, what used to happen in value added tax, VAT, before the GST came, there the states used to state used to put VAT, value added tax, on the goods produced in the state. So in VAT, what used to happen is, if you produce this remote, first you manufacture plastic, there is a VAT on plastic. Then from that plastic, this body is manufactured, then there is VAT on this body. Then from this body, this remote is assembled, then there is VAT on this process also. So what used to happen is, the taxes collected by the government in the initial processes, they were not reverted to the people. In GST, there is input tax credit. So what happens is, when I purchase plastic, I pay GST on that, and when I make body from that plastic and I sell it in the market, what happens is that the tax that I have already paid on the purchase of the plastic, the government gives it back to me, because there is double taxation in the VAT, which double taxation is removed by input tax credits, and it removes the cascading effect. So it does not increase in cascading effect, it helps in removing the cascading effect. So this statement is wrong statement. Next is, it has brought common procedure for registration of taxpayers, refund of taxes, uniform formats for tax returns and common tax base. This one is also a correct statement. Next is, greater use of information technology for filing of GST has reduced human interface. So this is also a correct statement. Now looking at the options, 1, 2, 3, 2, 3, 4, 1, 3, 4 and 1, 2, 3, 4. Answer here is C, 1, 3 and 4. Second statement is wrong. First, third and fourth statement are the correct statement. Now what you have to do is, even if you do not understand cascading, just again go and Google it, because these are the conceptual things which are actually asked by UPSC. UPSC would not ask in which of the following year GST was implemented. So what they would ask is, has GST increased the cascading effect, or which of the following taxes helps in reducing the cascading effect, and the options would be like GST, value added tax, service tax. So the answer is GST. Next question is, with reference to FRBM Act, which of the following statement is or are true? Is or are true with regarding to FRBM Act? It came into force in 1991. FRBM Act came in 2003. So this statement is a wrong statement. It consists of 2 policy statements. No, there are 4 policy statements in FRBM Act. So this statement is also a wrong statement. It was brought to institutionalize financial discipline and improve macroeconomic management. This one is a correct statement. Now the options are 1, 1, 3, 2, 3, 2 and 3. So we know first and second statement are wrong. 3 only is the answer here. So C is the answer for this particular question. Now what are the 4 policy statements? Please look in the detailed answers that are provided by the institute. Please look in those detailed answers. You will find the name of all the 4 policy statements and the year in which the FRBM Act came into force. Next question is, with reference to revenue deficit, which of the following statements is or are true? Now revenue deficit always, now whenever there are terms like always, or it is it always happen, it must happen, so be wary of these statements, because these are extreme statements, and most of the time, not always, but most of the time, these statements are wrong statements. Now revenue deficit always increases when revenue expenditure increases. Now in year 2023, if you have seen the budget of 24-25, the interim budget of this year, the budget of 24-25, if you have seen the budget, then you see that revenue expenditure has increased as compared to the last budget. The interim budget this year, the revenue expenditure has increased in comparison to last year, but the revenue deficit has decreased. Now why that happens? Because revenue deficit is equals to revenue expenditure minus revenue receipts. Revenue deficit is equals to revenue expenditure minus revenue receipts. So if revenue expenditure increases and revenue receipts also increases, but more than revenue expenditure, then revenue deficit will reduce. For example, if it was 100 and the revenue receipts were 80, so revenue deficit was 20 rupees. The revenue expenditure increased to 110 and revenue receipts increased to 100. Now what is the revenue deficit here? Revenue deficit is 10 rupees. Now if you look at the revenue expenditure, has it increased? Yes, it has increased by 10 rupees. But has it also resulted into increase in revenue deficit? No, it has not, because revenue receipts has increased more than revenue expenditure. So this statement is a wrong statement. Next is, increase in revenue deficit leads to increase in borrowings to fulfill consumption requirements. So this is the correct statement, because if there is a revenue deficit, it has to be fulfilled by some way, either by disinvestment or by borrowings. So revenue deficit is there, so revenue receipts are, we have already considered revenue receipts. Now what are the other receipts that the government of India can have? That is capital receipts, and there are 2 types of capital receipts. One is debt creating capital receipts, other is non-debt creating capital receipts. So one of the options for the government of India would be to borrow from the market to fulfill the revenue deficit. So this statement is a correct statement. Next is correct answer using the code given below. Answer is B, 2 only. Answer is B, 2 only. With reference to fiscal deficit, which of the following statement is or are true? Now what is fiscal deficit? Fiscal deficit is basically all the expenditure of the government of India and non-debt creating receipts of the government of India. That would include revenue receipts as well as capital receipts, except the borrowings. So fiscal deficit is financed by borrowings. Now looking at the statement, first is it indicates total borrowings of the government. Okay, so this statement looks like it is correct. Next is it simply equals to difference between total expenditure and total receipts. So total expenditure and total receipts are not here, because in receipts there are capital receipts. In capital receipts there is non-debt creating as well as debt creating capital receipts. Debt creating capital receipts, DCR. Debt creating capital receipts are not included while calculating fiscal deficit. So this statement is a wrong statement. Next is select the correct using the code given below. Answer is A, 1 only. First statement is the correct statement here, and second statement is the wrong statement. Moving forward, with reference to primary deficit, which of the statement is or are true? So primary deficit, even before reading the statements, first you should try to, picturize in your mind. Picturize in your mind what is primary deficit. Whenever there is a question on revenue deficit, fiscal deficit, primary deficit, first picturize in your mind, okay, what is primary deficit, and try to write the equation if you know the equation. Okay, so what is primary deficit? Primary deficit is basically deficit, fiscal deficit. Primary deficit is equals to fiscal deficit minus interest. Fiscal deficit minus interest. So primary deficit is equals to fiscal deficit minus interest. So it is obtained, it obtains an estimates of borrowings on account of current expenditure exceeding revenues. Now, borrowings on account of current expenditure exceeding revenue. What has happened here is fiscal deficit is all the borrowings. Fiscal deficit is all the borrowings, and interest is the one of the expenditure of the government of India. It is one of the expenditure of the government of India which is not current in nature. It is about the past borrowings. So government of India has a lot of loans upon it, and they have to pay interest upon that. So that is related to the past expenditures. So interest expenditure is related to past commitments of the government of India. So how does this statement, what do you make sense of this statement is, it obtains an estimate of borrowing on, so it is an estimate of borrowing, yes, it is an estimate of borrowing on account of current expenditure exceeding revenues. Now, out of all the expenditures of government of India, if we remove interest, all the other expenditures are current in nature. So all the expenditure of government of India, so what we have seen is capital expenditure and revenue expenditure, but of all the expenditure, only one expenditure is not of current nature, that is interest. Interest is because of the past commitments of the government of India. So all the other expenditures in the budget are of current nature. So all the current expenditure exceeding the revenue. So what happens is, when the expenditure exceeds the revenue, we borrow it. So primary deficit reflects how much we are borrowing to meet the current expenditure over the revenue. So this statement is a correct statement. This statement is a correct statement. Next is, it increases with increase in interest liabilities of India. It increases with increase in interest. If the interest liability increases, what will happen to primary deficit? It will reduce, because, for example, again take a numerical example. If 100 is the fiscal deficit and interest is 80, how much is the primary deficit? It is 20 rupees. If interest increases to 90, primary deficit will reduce. So primary deficit actually reduces with increase in interest liabilities of India. So this statement is a wrong statement. Correct answer here is one only. First statement is the only correct statement here. Next question is, with reference to deficits of government, which of the following statement is or are correct? So deficit financing is generally inflationary. Deficit financing is generally inflationary. Okay, the statement looks like it is a correct statement, because the more the government finances deficit, the more money it will put in the hands of the people, and as a result there will be inflation in economy. Next is, borrowings of the government leads to decrease in investment for private industry. Now, money supply in economy is more or less the total money in the economy available with the banks, with the financial institutions, is more or less constant at one particular point of time. It increases with time, but at one particular point of time, that is more or less constant. So if the financial industry has 100 rupees and government borrows 50 from it, then the rest of the industries and the private enterprises will be left with only 50 rupees to invest. So what happens is, when the government borrows a lot of money from the market, it results into lack of availability of credit for private industries. If government borrows a lot of money from the market, so if government borrows money from SBI, from HDFC banks or from other financial institutions, NBFCs, so these SBI, HDFC banks and financial institutions will not be able to lend more money to the industries like Adani, to Reliance. They won't be able to lend that money, because the money has been taken by government of India. So if the government of India borrows it, then it results into crowding out. So this statement reflects a concept which is crowding out. So what happens is, due to excessive borrowings, government due to excessive borrowings is result into crowding out of liquidity from the market, and as a result the investment of industry is also reduced. So this statement is a correct statement. So select the correct answer here. First statement is correct, second statement is also correct. So answer is C, both 1 and 2. Next question is, consider the following: increase borrowing, increase taxes, reduce public expenditure. How many of the above methods are used by government to overcome deficit? To overcome deficit, government will increase borrowings, yes. They will increase the taxes, they will increase taxes to overcome deficit, yes. Reduce public expenditure to overcome deficit. What is deficit? Deficit is basically when the earnings are not enough to meet the expenditure, when the receipts are not enough to meet the expenditure. So what you would try to do is, you would try to increase the receipts and you would try to reduce the expenditure. So we are increasing receipts here, we are increasing receipts here, and we are reducing the expenditure here. All the three statements here are correct. So answer is D. Moving forward, next question: which of the following measures can be taken to amplify expansions? To amplify expansions. Expansion is basically when the government of India tries to increase liquidity in the market by reducing taxes or increasing its own expenditure. So they expand the size of the budget. So which of the following measures can be taken to amplify expansions? And expansions are basically, they are incentives for private industries, for banks, for industries. These are incentives so that they are left with more money to invest. Now take example of say Reliance Industry. In which of the following will Reliance Industry or even the private enterprises will be left with more money? So we will take all the four statements here. Increase taxes. What happens when the taxes increase? Will the industries be left with more money? No. If the taxes increase, then the industries will be left with more money. So two statements here talks about increase taxes. So these two statements cannot be the answer here. Next is decrease taxes. Okay, taxes should be decreased. That is correct in both the statement. And increase government spending or government expenditure, decrease government expenditure. Now, in which of the following cases people or the industries will receive more money? When the government of India spend a lot of money, or government of India reduces its own spending? Obviously, when the government of India spends a lot of money, that will result into expansion of the economy, that will result into more money in the hands of people and in the hands of industry. So here the answer is B, decrease in taxes and increase government spending. So answer is B. Next is, with reference to zero-based budgeting, which of the following statement is or are true? With reference to zero-based budgeting, which of the following statement is or are true? Now, it is allocation of resources to agencies based on periodic re-evaluation of by those agencies. Next is, it is known as zero-based because it reassesses from top to bottom, having a hypothetical zero base. What is zero-based budgeting is, there are most of the budgets made by government or even private enterprises are incremental in nature. What happens in incremental is, okay, last year we spent 100 crore rupees in Pradhan Mantri Fasal Bima Yojana. Pradhan Mantri Fasal Bima Yojana. Or for you can take example of PIL scheme also, any scheme for that matter. So what happens is, in next year they will try to reevaluate. Okay, last year we spent 100 crore rupees and this year the budget has increased by 10%. So we will increase Pradhan Mantri Fasal Bima Yojana or PLI scheme expenditure by 10%. So what they do is, they increase it incrementally every year. If the budget is reducing, if they want to reduce it, they will reduce it by 10%. If they want to increase it, they will increase it by 10%. But they will not reevaluate whether actually this money is giving the returns that the government of India aspires. So in zero-based budgeting, they will reevaluate every expenditure from zero. Every expenditure has to justify itself every year. It's not like, okay, we have been spending in this scheme from past 5 years, so this year also obviously we will spend it. So in zero-based budgeting, it is not an incremental budget, it is a zero-based budget. Okay, every expenditure, whether it is Pradhan Mantri Fasal Bima Yojana, PLI scheme, PM Kisan scheme, any scheme for that matter, any ministry for that matter, every ministry, every scheme has to justify this year's expenditure in terms of how they have performed in the past. So every expenditure is re-evaluated. So what the second statement says is, it is known as zero base because it reassesses from top to bottom having a hypothetical zero base. Okay, this statement is a right statement. First statement is, it is allocation of resources to agencies based on periodic re-evaluation by those agencies. Okay, this is also a correct statement because there is a periodic re-evaluation of all the expenditures of all the budgets of that particular agency. So answer here is C, 1 and 2, both 1 and 2. Next is, with reference to effective revenue deficit, which of the following is or are true? Now, what is effective revenue deficit? We know revenue deficit is revenue expenditure minus revenue receipts. Effective revenue deficit is ERD. Now, you should be aware about these terms because these terms are used in the budget of the Government of India. This year's budget, if you look at, there are 4 deficits that the Government of India calculates. One is fiscal deficit, other is revenue deficit, then there is primary deficit, and then there is effective revenue deficit. So these are the 4 statements,